embarking on a quarter century of excellence.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening.
It would be wrong to think or assume that a change of our approach or that, any kind of loosening, etc. is round the corner.
The Monetary Policy Committee leaves key policy rates unchanged for the fifth consecutive time, maintains the stance at withdrawal of accommodation. Governor maintains inflation remains a top priority, warns it would be wrong to assume any kind of loosening is around the corner. The RBI raises its FY24 GDP growth forecast by 50 basis points to 7%. The governor says private capex is picking up and rural demand is turning around. Deputy Governor Michael Patra says even the 7% forecast for growth could be conservative. The Sensex and the Nifty end at record levels, gaining 3% this week, the biggest weekly gain that we've seen in 16 months. Markets have also gained for the sixth straight week, the longest winning streak in 3 years. The government says the curbs on the use of sugarcane juice for ethanol production is a temporary pause, adds that it will review the present position once there is an uptake in sugarcane production. The government also says there is no question of any dilution in the ethanol blending program. Shares of GMR Airports worth 4,500 crore rupees exchange hands via block deal. Sources say non-promoter entities sold their shares to long-only funds, including GQG Partners. That's CNBC TV 18 exclusive. Zomato shares worth 1,100 crore rupees exchange hands through block deal. Sources say SoftBank is likely to have sold its entire stake in the company. That's another exclusive. SEBI Chief Madhabi Puri Buch announces plans to create a new asset class between mutual funds and portfolio managed services. Also promises same-day market settlement before FY24 and instantaneous settlement before FY25. Israel intensifies its attack on Gaza. Hamas-run health ministry says that at least 350 Palestinians have been killed in Gaza over the last 24 hours. The UN Security Council will vote today on the Gaza ceasefire after the Secretary-General invokes a charter that was last triggered during the Bangladesh Liberation War in 1971. TMC MP Mahua Moitra expelled from Lok Sabha in a cash for query case. The Ethics Committee report recommends her expulsion. It was tabled just hours before Parliamentary Affairs Minister moved a motion to discuss the issue. Well, let's go straight to the top story this evening. The Monetary Policy Committee has left key policy rates unchanged for the fifth straight time. This as per what the CNBC TV 18 poll had suggested. The repo rate remains at 6.5%. The stance has also been retained at withdrawal of accommodation. RBI Governor Shaktikanta Das says that inflation remains the top priority. The inflation forecast for FY24 remains unchanged at 5.4%. The governor expects inflation to gradually decline in the next financial year. Governor Das also warned that it would be wrong to assume that there is any kind of loosening around the corner. The key difference between the last policy and this one is in the Reserve Bank's commentary and an outlook on growth. The GDP estimate for FY24 has been hiked by 50 basis points to 7%. In fact, RBI Deputy Governor Michael Patra said even 7% could be a conservative number. Take a look.
It would be wrong to think or assume that a change of our approach or that, any kind of loosening, etc. is round the corner. That's not on the table at the moment. There are signs that rural demand is also turning around. In the first 7 months, from April to October, 36.7% growth in capital expenditure. Secondly, private capex is also showing signs of revival, particularly in sectors like petroleum, steel, cement and chemicals.
If you just sort of put that actual number and the projections we made in the last policy together, you'll come with number close to 7 or at 7. 6.8. 6.9. Thank you. But if you look at October-November data, the high-frequency data which we use for our nowcasts, they are all very robust right now. So if you just take October-November data, you'll exceed 7. So at the current time, 7 is like a conservative estimate.
7% may be too conservative. That's Michael Patra, the RBI Deputy Governor. Lata standing by now to take us through her take on the policy. Lata, as expected, as far as rates are concerned, status quo continues. The RBI Governor also cautioning that one shouldn't assume this to mean that the position has moved to neutral or that there is any loosening around the corner. But on growth, Lata, I mean, 7% too conservative, says Michael Patra there. What do you make of the comments that came in?
I would agree that the standout message of this policy is that the RBI is much more optimistic on growth than one thought they would be, than definitely what the market is at this present. It's actually an across-the-board revision of growth. As you can see, the entire FY24 has been revised by half a percentage point. You know, that's big. And then, we already know that the second quarter is 7.6 compared to their earlier estimate of 6.5. But Q3 has been again revised up by a full half a percentage point. Q4, we already had a forecast of 5.7 from them, gone up to 6. FY25, we had one forecast from them up to quarter one. That's been revised higher by, albeit only 10 basis points, but still revised higher. Q2, these are new forecasts. We didn't have an older forecast for that from RBI at 6.5% and Q3 at 6.4. But that brings the Q1, FY25 forecast of 6.5. There's no one on the street with such a strong forecast. The forecasts were mostly 6.5 to 6.7 for the current year and 6.2, 6.3 for next year. So the Reserve Bank beats all of them by at least half a percentage point. But there is one thing to say in favor of the Reserve Bank. From the start, they have been maintaining that the GDP for the current year will be 6.5. The entire street was at 6 or below 6. They are catching up with the Reserve Bank. So, the bias, when you look at the performance of forecasts, you want to align yourself with the Reserve Bank. They've got it right more than anyone else on at least growth. So, well, if they're tom-tomming 7%, it takes one's breath away. But it's clearly the standout message from the policy. The others on inflation, they've not changed anything, actually. They've maintained all those numbers as is. The important point to note is that when we come to the next year, second quarter inflation eases to 4%, but that's everyone's number. I didn't get any different number in the street. There were some people even below 4. And 4.7 for Q3. This would mean that, just as you get that 4 number, the policy that comes around that time is August. At that time, will the Reserve Bank move towards neutral and a rate cut? That's the guess that the market is at now. The Reserve Bank, however, didn't give out anything like that. They continue to maintain that the policy will be disinflationary, which means it will work to bring down inflation. And let's come to the stance. The stance quite clearly reiterates the previous stance. Okay, a word about food. They're worried about food inflation, but they do claim that core inflation has come down because of their efforts. Those are just a few details on inflation. But on stance, they've absolutely unchanged, whether it's a question of the withdrawal of accommodation or whether it's a question of liquidity tightness. There is absolutely no change in the wording. In case someone missed it, they said that OMO, the open market sales of bonds to absorb liquidity, is very much a tool. It is on the table. Perhaps if you want me to summarize as 2 key takeaways, one is the super optimism on growth, and 2, the fact that there is no shocking element. Previous 2 policies, they shocked us once with an ICRR, incremental cash reserve ratio, and last time with an OMO sales threat. This time it was no such shocks. That was the shock.
All right, Lata, we will take that. Thanks very much for joining us. Lata, they're summing up the credit policy the MPC delivered today. Now, the Chief Economic Advisor to the government has backed the RBI's decision to impose curbs on unsecured personal lending. Speaking at a CII event, Anant Nageshwaran said optimism should not become the cause for premature triumphalism. The CA also struck a cautious tone on growth, saying that there are many mountains to climb before India builds itself as the growth engine of the world. Take a look.
unsecured personal loans were growing at the rate of 30%, and RBI increased the risk weights so that banks and non-banking financial companies would moderate the unsecured personal loans. This is about stronger for longer. Our optimism should not become the cause for premature triumphalism. Private capital formation is the tool that we will need to look for, and we are all looking forward to rev up the growth engine, apart from the fact that we need to have an attitude of the road is long and there are many milestones to cross and many mountains to climb before we can bill ourselves as the world's growth engine, both in absolute terms and in relative terms.
Well, that's the Chief Economic Advisor. On to the market action of the day. Bulls managing to maintain the momentum on the Lal Street. The Sensex and the Nifty ended a strong week on a positive note. So we saw the Sensex and the Nifty closing at record levels, gaining 3% this week. This is the biggest weekly gain that we've seen in the last 16 months. Now, this also is the 6th straight week of gains, marking the longest winning streak in 3 years. Bank stocks perked up after the RBI policy, but the mid-cap index ended the day in the red, snapping a 25-day winning streak. The government has said that curbs on the use of sugarcane juice for ethanol production is a temporary pause. Remember, the government had directed oil marketing companies not to use sugarcane juice and sugar syrup for ethanol production in a bid to keep sugar prices in check. Sapna joins us now with the details. Sapna, take us through what the government view is as far as this ban is concerned. Temporary in nature?
Well, both the food and the petroleum secretaries are on record in terms of, putting this entire development into context. So first, of course, the food secretary has mentioned very clearly that this is a temporary pause. In fact, the petroleum secretary also echoing the same view that this is a temporary pause, and the government will be doing a monthly review of the situation. We'll be looking at the sugarcane production numbers, and if required, there could be a tweaking. That is not being ruled out. So the current arrangement can be revisited, of course, depending on the data. It may just be likely that in the next month or by next mid-month, that review may be possible, in favor of the industry, so to speak. The second thing, of course, we need to put this in context is that there has been a worry in the government on falling sugarcane production. If you look at the first advanced estimates, that's what it reflects, plus the added impact of drought in Karnataka, unseasonal rains in Maharashtra. Both of them put together has queered the pitch, and hence the government is taking this decision. Third, of course, we need to highlight that only the existing orders of OMCs in terms of sourcing of ethanol from B-heavy molasses, those existing orders continue. The future orders will depend on what kind of review the government is doing. That's third. Fourth, of course, this brings us to the ethanol blending target. Well, the petroleum secretary is on record and extremely clear that nothing is diluting that. 15% for the current season for this year, 20% by FY26, that remains completely unchanged. And just to reiterate, this is a temporary pause, and government will revisit the decision depending on how the sugarcane production numbers pan out.
All right, Sapna, many thanks for joining us. In fact, we're now joined by Rohit Kumar Singh, the Consumer Affairs Secretary, to take this conversation forward. Mr. Singh, appreciate you joining us here on CNBC TV 18. Before I move to other issues, let's address the decision that the government has taken on ethanol. Now, how concerned are you about sugarcane production? And as Sapna was pointing out, that perhaps a review could warrant a change in the government's position as far as sugarcane production and its linkage to ethanol is concerned, ethanol procurement is concerned. When do you believe realistically we should expect a review?
I think we constantly watch the production numbers, and because there were some weather concerns, so we are just being extra cautious. But the review process is constant, and 4 or 5 of us secretaries meet every Wednesday. So the review process is continuous, and if there is a data point or if there is a reason to change the decision, we can always do that.
Okay, so it's a weekly meeting of secretaries and you say that a review is likely if the data suggests. Now, what would give you comfort to warrant a review, to warrant a change in position? What is that number, or if you could give us a ballpark number that would warrant a change in position?
I think the domestic availability of sugar is the supreme criteria. So if we are satisfied that at the end of the or at the beginning of the next crushing season, which also coincides with the festival season, if there is enough stocks available, that will give us comfort. So I think that's the primary criteria.
So what is the expectation then in terms of prices, given the fact that you are concerned about sugar production at this point in time, as well as perhaps inventory? What is the expectation on where prices could be in the near term?
I think because of the fact that government is being cautious on this, the prices are not likely to increase. It will remain the same because of this action that has been taken as part of the decision.
Okay, so you believe that the notification that the government put out yesterday will ensure that prices stay in check. But, you know, we have the monetary policy being delivered by the RBI today. And while overall there is no change as far as the inflation trajectory or the inflation forecast is concerned, the RBI does have concerns on food inflation. So I wanted to understand from you now, in light of the data that is available with you, what are the pockets of concern? What are the items of concern at this point in time?
I think we are watching the onion prices, and of course in onion there is a seasonality both in terms of availability and affordability, production, consumption. So we are watching that very carefully, and because despite the minimum export price of $800 we realized that more than 1 lakh tons was going out of the country every month. So that is why government had to take that decision, because domestic availability of onions in this season is very important. As you would appreciate, onions 70% are produced in Rabi. That crop becomes available from April. Then there is Kharif and late Kharif. The crop is available now till late February. So we have to ensure that throughout the calendar the availability of onions is there, and that is why these policy decisions and tweaking takes place, to ensure that across 12 months there is adequate availability.
So onions continue to be a point of concern. Any further intervention at this point in time required? Because as you pointed out, you already brought in the export measures or export curb measures.
So it is actually a bit of concern, but not too much of concern, because some analysts were expecting it to go to 100. But we took a lot of decisions and actually in times. So the all India average has never crossed beyond 60 this year. As we speak, it is about 57. It's likely to come down further. There are two other points that I want to mention here, that we are also intervening through NAFED and NCCF, both in wholesale and retail. So retail intervention is probably for the first time, and we have seen that it is working, both in case of onions and in case of pulses. So we are likely to continue this intervention.
If you can take us through the intervention, and what specifically you have done and what more you believe you may need to do, the measures in your arsenal at this point in time, both to deal with checking onion prices as well as pulses.
So the buffer, which used to be about just 50,000 metric tons about 3 years back, this year, if you talk of the onion buffer with the government, we increased it to 7 lakhs. And we've realized, we have done this analysis, that the quantum of buffer available with the government, the price rise is inversely proportional to that. So if government has adequate buffer, it's a signal to the market that if somebody tries to act funny, then we can intervene. And that is what has been happening. And we pick up from the markets where the prices are okay, and then we infuse in the markets where the prices are running high. We on a daily basis pick up prices from 550 districts across the country, 3 points in each district. So we have 550 into 3 into 22 commodities, so many data points on a day. And there's a dashboard. We analyze where the prices are running high, and there we ask NAFED, NCCF and other agencies to intervene. So that is what goes behind the curtain, and that is why you must have realized that despite a little concern in production, onion prices have not really hit the roof.
Let me use the words that you just used a short while ago, saying if somebody acts funny, and I know that you have previously said that there have been instances of traders hoarding, in your words, acting funny. Have those issues been resolved? And are there any points of concern where you believe that market dynamics are being sort of held hostage to funny acts?
We do see some instances, but since we take adequate actions in terms of stock limits, stock declarations, we get this reports from the Intelligence Bureau, we know what is happening, we talk to state secretaries, constantly engage with the markets, with the associations, the IPGA and the traders. So we also constantly talk to the analysts, and we know where things might go wrong. And we do intervene in time, and that is why we've been able to manage the situation so far this year.
Okay, so let me end then by asking you, sir, we're at the end of this calendar year now, and it has been a challenging year, especially in terms of volatile vegetable prices. And of course, now you are dealing with the issue of sugar production. What would be the priorities that you're going to be addressing? What is flashing red on the dashboard, on your dashboard today?
So, actually, it is no more red. We have seen the wholesale prices of pulses fall last week, and it will translate into reduction of pulses prices in the end. The supplies from Africa, where there's some issues which is also coming in terms of tur dal. The urad, of course, the local production has come, but Myanmar, the crop is good. It will start flowing in India from January onwards. So I don't think there is anything red on my dashboard now. It has turned to orange or to green. The only thing I want to highlight here is the wholesale price fall will translate into retail price fall with a delta. It's about 30 to 40 days in respect of some commodities. So you will see it happening. The other good point is that the consumption is lower in winter season because a lot of people prefer the price sensitive segment of the population prefers vegetables. So in these months, even the pulses consumption is low. So there are no red signs as of now.
No red signs on your dashboard. That's good to hear, sir. Thanks very much for joining us on CNBC TV 18, and we look forward to hearing back from you on the issue of procurement for ethanol as and when that review does take place. It is, as you pointed out, a weekly process, but if there is a change in stance, we look forward to hearing more from you on that front. Appreciate your time here on CNBC TV 18. With that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Do stay tuned. The news continues here right after this break.
CNBC TV 18, embarking on a quarter century of excellence.